Warren Buffett just said the dollar is going to hell. Not privately, not behind closed doors, publicly, on stage. Now pause right there and think about what that actually means. The most conservative investor in the world is openly warning about the currency. And yet, silver is still sitting around these levels. That doesn't make sense. If the dollar is losing value, silver should already be moving aggressively. So why isn't it? Let's slow this down. Buffett is holding over $300 billion in cash. At the same time, he is telling you that currency is going to lose value. That is a contradiction, a big one. So ask yourself this simple question. If he really believes the dollar is going to hell, why is he still holding it? Or maybe the better question is this. What has already moved that you're not seeing yet? Because Buffett is never early. He is deliberately late, always. He waits until the structure is already in motion. Then he speaks. So if he's talking now, the move is not starting. It has already started somewhere underneath. And that's where things get uncomfortable. Now look at timing. The same week he made that statement, silver moved from 77 to 81. Fast, not gradual. Now connect that. A dollar warning and silver moving at the same time. Coincidence or signal? But here's the real problem. If Buffett is right, if the dollar is already weakening, silver should not be this low. Not even close. So what's holding it back? Or more importantly, what is being suppressed? Because once you start asking that question, everything changes. What you're looking at on your screen is not the real silver market. It's the paper market. COMEX, futures, contracts, promises. But the real market is physical. And right now, physical silver is telling a completely different story. Shanghai is trading above COMEX. Premiums are rising across multiple regions. Metal is getting harder to secure. That means one thing. The real price is already higher than what you see on the chart. So ask yourself this. If the real world price is higher, why does the screen still show a lower number? Because there is a delay. And delays in markets like this are not harmless. They are pressure building, quietly. Now go back to Buffett's statement. He didn't say maybe. He didn't say possibly. He said the natural course of government is to make currency worthless over time. Inevitable. So what happens next? If currency weakens, real assets must reprice. Not because of hype, not because of news, because of math. And silver sits right in the middle of that equation. But here's where it gets interesting. This disconnect between paper and physical does not last forever. It can stretch. It can delay. But eventually, it closes. And when it closes, it doesn't do it slowly. It snaps. So now ask yourself again, if physical silver is already stronger, why is the paper price still lagging? Because something is holding it there. And that something cannot hold forever. Now let's go deeper into what's actually happening underneath the surface, because this is where most people lose the plot. They focus on price, but price is the last thing that moves. Structure moves first. Signal number one, debt, $40 trillion, interest payments rising. The system cannot sustain it. So what happens? Inflation. Always. That's not theory. That's history repeating itself. Signal number two, supply deficit. 6 consecutive years, more silver consumed than produced. That gap doesn't reset. It builds. Year after year. Pressure stacking on top of pressure. Signal number three, China, hundreds of tons in a single month. That's not retail buying. That's strategic positioning. They are not chasing price. They are securing supply. Signal number four, physical premium. Shanghai trading above COMEX, 10 to 13% higher. That is the real market speaking. Now combine all four signals: debt pressure, supply shortage, strategic accumulation, physical premium, and yet price still looks controlled. That combination should not exist, but it does, and that tells you something critical. The system is holding, but it's under stress. Now ask yourself this: what happens when a system under pressure reaches its limit? It doesn't adjust slowly, it breaks. And when it breaks, price is not gradual, it's violent. So now we get to the most important phase, the delay. This is where most people get trapped because nothing looks dramatic, nothing looks urgent. Price is moving, but not exploding. And that creates a false sense of stability. But this phase is where the biggest moves are built because delay doesn't remove pressure, it compresses it. Now here's the dangerous thought. What if the price you are watching is already wrong? What if 70, 80, even 100 is not real value, but controlled value? Because when physical demand meets limited supply, price doesn't adjust smoothly, it jumps. And this is where most people fail. They wait for confirmation, they wait for headlines, they wait for the move to already happen. But by then, it's too late. Now bring in projections. Bank of America, 300 plus, based on gold-silver ratio compression, not hype, math. But here's the real question. What if even that number is conservative? Because if the dollar weakens faster, if supply tightens further, if delivery pressure hits the system, that number moves higher, fast. Now think again. Buffett confirms currency weakness. Physical market already stronger. Supply tightening. Demand rising. And yet price still looks calm. That's not stability. That's compression. Now we come back to the original question. If Buffett is right, why is silver still here? Because the market hasn't caught up yet. And when it does, it won't be slow. It will be forced. Because markets don't wait for permission. They move when pressure becomes too large to contain. And that's exactly what we're seeing right now. Pressure, not noise. Now let's be clear about one thing. There is risk. Silver can drop in the short term. It has done it before. It can do it again. That's volatility. But volatility is timing, not direction. And this is where most people fail. They react to short-term price instead of understanding long-term structure. If you are holding physical silver right now, Buffett just validated every structural reason you made that decision. Not with hype, not with speculation, with the most measured language he has used in 60 years of investing. Let me give you the complete Buffett statement from Omaha, May 2nd, 2026, Berkshire Hathaway annual meeting, his final appearance as CEO before handing over to Greg Abel. He chose these words deliberately. Quote 1, "We wouldn't want to be owning anything that we thought was in a currency that was really going to hell. And that's the big thing we worry about with the United States currency." End quote. Quote 2, "Fiscal policy is what scares me in the U.S. All the motivations are to do things that could cause a lot of trouble." He is describing the $40 trillion debt and the political inability to address it. Quote 3, "The natural course of government is to make the currency worthless over time. The value of currency is a scary thing." He is not describing a risk. He is describing a historical law. Government always inflates. Quote 4, "There could be things happening in the United States that make us want to own a lot of other currencies." He is already positioning for dollar alternatives. $373 billion watching for the exit. Now compare those 4 quotes to the 4 structural silver signals. Quote 1, "Dollar going to hell maps directly to COMEX drain. When dollar goes to hell, physical assets reprice." COMEX shows physical already repricing. When Buffett goes public with a concern, the smart money has already positioned months ahead of him. Smart money doesn't react to price. It reacts to structure. And right now, structure is not stable. It's building. So ask yourself again, does this look like the end of a move or the beginning? Because once this adjustment starts, you don't get time, you get reaction. And that's where most people enter late. Now I want your answer. Type bullish if you think this move is just starting. Type bearish if you think it's already priced in. Because in the next video, I'm going to show you the exact trigger, the one signal that turns pressure into movement. And when that signal appears, everything changes.